Hello and welcome to IBTimes TV. I'm Leanna Brindon, news editor for the International Business Times. Joining me now is William Tebbit and he's with Trade Finance Partners. So hi, thanks for joining us today.
Good morning.
So we're going to talk a bit about TTIP. So it's meant to shake up the EU and US trading agreements. How will that affect though private finance if it does come to pass?
I think in terms of the effect, what it's going to do is put more pressure on the funding world. The intention is there's going to be more trade, and as we know right now businesses are still struggling to access capital. So if there is more demand for it, that's just going to put more pressure on the suppliers of capital.
Will there be a lot more cost borne by maybe companies like yourselves having to find new ways of offering new kinds of products or deals because there'll be such a more array of people out there looking for credit?
I don't think so, no. I think what it will mean is that the products that exist today that companies can access will just have more demand for them. So for us, hopefully we'll get more and more inquiries, better quality inquiries, and hopefully we'll get more inquiries from UK businesses looking to export into the US market.
Well, when it comes to TTIP, there have been, some people would see it as an opportunity, some people see it as a concern about public services being involved in this trade partnership. However, how would you see that as an impact in terms of growth within trade if TTIP did happen? And of course, would that cause any maybe issues for people like yourselves if former public services were looking for credit?
Our business generally probably wouldn't look towards clients like that who'd be looking for credit from us. Generally suppliers into those businesses, yes, and I think that again it's just going to be more business, people looking for more access to capital. That's going to be the real benefit and also the challenge.
And where would you see maybe the jobs market or other markets, the changes in dynamics if TTIP did happen?
I think overall, I mean, I'm positive about it. I think that less regulation is good. It always depends where regulation starts. If you're over-regulated, then less is good. If you're under-regulated, then less is bad. But I think we're in a position where there's probably too much regulation for businesses, which makes them struggle to export. So if we're having less regulation, businesses are going to be more able to tender, win contracts overseas. When that happens, they are going to need funding. And if we do believe we're coming out of recession, and certainly what we're seeing in terms of applications and people approaching us for capital would indicate we are, this is just going to put more pressure on that funding system.
On the funding system at the moment, because there's companies like yourselves that are there to provide credit for where sometimes people wouldn't be able to find it in other more traditional boutiques, let's say, or banks. However, if there is suddenly a boom in more people being able to win those contracts overseas, they will need that credit to get that going. Will that also put pressure on people like yourselves because there's not enough to go around, or are you working towards that?
Yeah, no, it will put pressure on us, but it'll put a very good pressure on us. For us, it'll mean that we'll have more opportunity to pick and choose the clients we work with, and hopefully that'll increase the quality of our business. But also, hopefully, it'll bring an awareness to business that they've got to look to other sources of funding other than just the traditional banking world. And if they do that, I think that's good. That's good for everyone. And
so wrapping up, I mean, we've talked about the opportunities that would be created for the US and the EU, but do you also see other markets that will maybe have a knock-on effect in terms of growth elsewhere? Yes,
I think so. I mean, let's put it into context. I mean, the UK exported in sort of 2011 was the last numbers I've got into Europe about 200 billion pounds of goods, and over the same period about 37 billion into the US. So US was probably our most important non-EU trading partner. So there are going to be opportunities, of course there will, but I don't think that'll necessarily be as a direct result of this into the other markets, but there is more and more trade now, and there's definitely activities picking up.
You've been around for a while, so where do you see now in 2015, 2016 the growth areas for Trade Finance Partners?
Yeah, we've been around since 2010, 2011, and we've sort of pretty much doubled every year since then. We see more of the same, still the same problems facing business, but what is happening is there is a greater awareness of alternative sources of finance. So businesses are getting smarter, they're looking further afield for funding, and they're being more confident that they can get it, not necessarily from the traditional sources. So for us and business as a whole, it's good. It's not easy, it's tough, but good businesses survive.
Fantastic. Well, thank you very much for joining us today.
Pleasure.
And that was William Tebbit from Trade Finance Partners.